Hello, welcome to the Charity and Security Network webinar on tips for successful banking relationship for nonprofit organizations. I'm Kay Gannan, the director, and I'm pleased to welcome Andrea Hall of Charity and Security Network and John Byrne of AML RightSource as our experts today in presenting new guidance from the Consortium for Financial Access. The Charity and Security Network first became aware of problems nonprofit organizations were having with bank account closures several years ago, almost a decade. And during the ensuing years, we have learned that the problem has grown to include a broad number of charitable organizations, and data shows that it's not just account closures, but making international transfers and responding to information requests. In 2017, we published empirical data showing the breadth of the problem, and after that, the World Bank and Association of Certified Anti-Money Laundering Specialists launched a multi-stakeholder dialogue to pursue solutions to the problem. In the course of that dialogue, we have learned a lot about the banking sector, and the banking sector has learned a lot about the nonprofit sector, and that joint communication has contributed to the guidance that we will review today. The U.S. government has not been an active participant, which has slowed progress, particularly since there is no clear legal structure for bank customers to make a complaint when an account is closed or a transfer is delayed. However, there are things that we all face in terms of the sanctions, Bank Secrecy Act requirements, and the counterterrorism laws, that we can understand how it affects each other's sectors and make basically the best possible strategies and communications for smoothing the way for international transfers for charities. So with that, I'd like to turn it over to our speakers. We'll start with John Byrne, who is, as you'll see in the bio, a very experienced anti-money laundering specialist, a very active leader in this entire effort, and head of AML RightSource. And we'll be joined by Andrea Hall, who's the policy counsel for the Charity and Security Network. John?
Thank you, Kay and Andrea, for the invitation, and welcome everybody. This is the, not the culmination, but this is the beginning, we hope, of a strong dialogue. And let's go to the first slide. A strong dialogue with all the stakeholders that are so important to making sure that charitable organizations, NPOs, all forms of humanitarian groups get the access that they need to financial services. And so when, as Kay mentioned, when we began this process several years ago, we did it for a number of reasons. One, if we go to the first slide, one of the first reasons is there's been an ongoing tension in the financial sector for a long period of time between the business lines and the compliance function. As you would appreciate, if you're not from banking, you would appreciate that obviously the financial sector is in there to make revenue, to extend credit, to extend loans. And obviously the compliance function is to make sure you're doing things appropriately within the guidelines set forth by the laws and the regulations. What's happened here is that our regulatory partners, who actually have been part of this dialogue, certainly throughout most of the process, they have looked at different relationships the financial sector has had and have questioned issues regarding risk. And so what's happened, unfortunately, in the financial sector, that in some cases, unfortunately in many cases, financial institutions may decide to simply stay out of a certain line of business, a certain area of focus, because they don't know that they have the ability to manage the risk successfully in terms of the regulator's view. They may think that they can, but that's part of why we did what we put together today that we'll talk about. The focus today is on nonprofit organizations, but it's clear to the financial sector that managing risk is a broader issue. But I think, and I'm sure Kay and Andrew will back me up on this, when we first started this dialogue several years ago, the consensus in the room of all the stakeholders is we need to help the nonprofits. This is one area where we all can agree on, whether you're in law enforcement, the regulatory side, or the financial sector, that this is a problem we need to reconcile right away. And so while there's other issues within the financial sector, this is a key one. And the good news is there's uniform support for doing what we put out last week that we'll talk about today. This guidance document, if you learn nothing else from us in the next hour, we want you to read the document, utilize it, and give us your thoughts throughout the process. We're trying to give you practical advice to both sides, to the NPOs and to the financial sector, so they better understand each other. And we stay away, the financial sector, from blanket de-risking. So if we can go to the next slide, as Kay mentioned, based on all of this, we came up with this consortium for financial access. You can see there who is all involved. It did start under the umbrella of ACAMS and the World Bank and the, again, impacted groups in the humanitarian and charity world. We've had earlier documents, but this document has come from all stakeholders. And if we go to the next slide, the document we've labeled Banking NPOs, the Way Forward. And as you'll see, if we can jump to the next slide, as you'll see that there are key things here. Recommendations for, again, both NPOs and the banks, understanding that not all entities in any stress are high risk, and how do you deal with that? And then the last line, I think, is the key. Anytime an NPO doesn't get access to financial services, or financial services are slowed down or delayed, the ultimate impact is on the beneficiary. And while it's not on the slide, I've said this many times since the first stakeholder meeting. What really drew me to this issue, besides the obvious, was a gentleman that stood up that represented a particular charity in a conflict zone and basically said, what we in the financial sector needed to understand is when things get delayed, when finances don't make it to the ultimate beneficiary in terms of medical supplies, water, utilities, people die. Dramatic statement, but a true statement. And I think everybody in the room that day in the financial sector said, we got to do something. So this is one of many things, but we're really proud of what we were able to put together. And if we can go to the next slide and bring Andrea into the conversation.
Thanks, John. As John mentioned, not all charities are uniformly high risk, but there are certainly charities working in conflict zones, working in places where there are designated groups, terrorist groups nearby. As one of our members once said, it's a challenge to help the bank figure out why we want to go into a place that most people are trying to flee. So what are the things that are protecting nonprofits? What are the things that are ensuring that nonprofits are not abused, whether it's by terrorist entities or other sorts of fraud and criminal activity? All countries' regulations are very different. It would be virtually impossible to summarize on a global level the regulation and oversight of nonprofits. However, the regulations do fall into general categories, and they address fundraising, spending money, protecting the public from fraud, money laundering, and terrorist financing. In the U.S., and we are going to focus on U.S. regulation here because many, many transactions around the globe are taking place in U.S. dollars. So banks in other countries are needing to comply with U.S. regulation. In the United States, nonprofits must apply for tax-exempt status with the IRS. And after they do so, they must file a Form 990 annually with the IRS. If they conduct international activities, there's an additional form called the Schedule F that outlines all of that work. All of these filings are available to the public, and there's a website called guidestar.org that is a database housing all of these Form 990s and the appendices such as the Schedule F. At the state level, nonprofits must file their articles of incorporation and their bylaws, and some states also require annual reporting. Nonprofits that receive federal grants are required to submit to audits that are set by the federal government. Next slide, please. In addition to the regulatory requirements that NPOs are subject to, they voluntarily adhere to a host of due diligence, oversight, and transparency mechanisms. The bottom line is that nonprofits don't want their money diverted any more than you or I do. They don't want the money falling into the hands of bad guys. These good governance and due diligence mechanisms are designed to ensure that the funds of the nonprofit are spent solely for charitable purposes. So they undertake considerable efforts to protect themselves, their programs, their staff, their donors, and their funds from terrorists, as well as fraud and other criminal activity. It's important to keep in mind that there is no one-size-fits-all approach. So if a financial institution is asking a nonprofit for some sort of documentation of the due diligence that they do. Don't expect to see carbon copies from nonprofit to nonprofit. It will vary depending on the characteristics of the organization. But typically, you'll look for things like a risk assessment, screening of vendors and partners against government lists, as well as internal policies and practices that are in line with humanitarian principles. Next slide, please. One of the things we learned in the stakeholder dialogue process was that many times nonprofits or financial institutions with nonprofit clients are trying to fit a square peg into a round hole. And that is because they haven't dealt with a variety or wide array of nonprofit customers, and they don't fully understand the business model, for lack of a better term, of the way nonprofits operate is in fact very different from commercial customers. So it's important to understand that nonprofits don't have owners, they don't have shareholders, they have donors, which can be individuals, companies, foundations, or governments, and they have a board of directors or a board of trustees that oversee the operations of the organization. Nonprofits do not have customers, they have beneficiaries. And as Sean mentioned, these are the people at the end of the supply chain that are getting the food and water, the education, the tent, whatever they need to survive. And when the money doesn't go through for those programs, in fact, lives are lost. While commercial customers are profit-driven, nonprofits are driven by their public service mission, and that is supported by all of their expenditures. And while business decisions and sales may dictate the transaction pattern of commercial customers, with nonprofits, it's going to be their activities and fundraising that dictate their transaction patterns. So while there may be regular payments on things like rent and salaries, you may see an uptick, for example, after an annual fundraising dinner that will be out of the ordinary pattern of the deposits. So an organization has a big fundraiser the next day or the next week, they're needing to make a huge amount of cash deposits. The onus is really on the nonprofit in these instances to let the financial institution know ahead of time that this sort of uptick or different pattern is coming. The financial institution may be doing a very good job of understanding the nonprofit's business model, but at the end of the day, they're not mind readers. They need to know what sort of activities will impact the banking relationship. There may be a board meeting coming up in which the board will approve all of the projects for the coming year. And after that, you will see an uptick in wire transfers to various countries. The nonprofit needs to let the financial institution know ahead of time what the anticipated projects are, what countries are going to be involved, and how much money will need to be transferred for what programs. Next slide.
So Andrea's last point is so essential, and that's understanding patterns. And the corollary in sort of traditional banking monitoring is you set up an account, a business sets up an account, and then as they fill out their information, they have a dialogue with their relationship manager. And so the example could be a seasonal place that's a ski resort is going to have more money coming in during that season than they do in the summertime. So that same thought pattern has to happen with NPOs, is sit down with the representatives, get a sense from them on what they expect, and that will certainly help make the pattern understandable. So the pattern won't be unusual if you start to have an uptick, whether it be twice a year or after a certain event. You'll understand that. So I think that point cannot be stated enough. And the communication and the understanding, if you know what the patterns are, they're not going to be considered suspicious. So I think that's an important point that we learned throughout these dialogues. Other recommendations for financial institutions, the whole notion, all of us in the AML community and banking have been dealing with this for several years, and that's the risk-based approach. Whether it's in the United States, whether it's emphasized by the Financial Action Task Force, the international organization, which all of our governments are part of, or most of our governments, not all NPOs are high risk. You can't generalize. This is important for a number of reasons, which we'll continue to emphasize. Much information is already publicly available from the NPOs and their Form 990s, as already has been referenced. You're not expected to identify each individual donor, but your due diligence for high-risk accounts should look at things like large contributors. And in many of these, just think about your own life in terms of maybe universities where you contribute money, or faith-based organizations. There's going to be the large donors, and obviously there's going to be the smaller donors. Understanding that won't make things unusual or suspicious. What is the funding and disbursement criteria? Again, the dialogue up front. We'll talk later about distinguishing sham from legitimate NPOs. We know through the IRS and the FBI and Federal Trade Commission that, unfortunately, when there's ever a disaster, there's the good news is there's always organizations that step in to help people, but there's also, sadly, sham organizations that commit fraud and other financial crimes. So trying to distinguish those and what are the key elements of that become pretty important. If at all possible, collect only what's relevant from the NPO. That's where the exchange of information becomes important. The NPO needs to understand, and we'll talk about this in a few slides coming up, what the financial institution is required to get. And if you do some of your own independent research, you'll know what's already out there. In some cases, you may see something as relevant, but maybe the conversation with the NPO who's confused about what you're seeking can be addressed. And then consider privacy concerns and proprietary information. Privacy is always a challenge for collecting information, as we know, but it's something to be sensitive about and to do your best to understand. So if we can go to the next slide. So due diligence is a key element in the financial sector, as we've already learned, is of course in the NPO sector. One of the things that we in the AML community struggle with is making sure our source material is trusted and reliable. And doing due diligence, again, there's public information, there's obviously what we call negative news, media information, all of that. It's harder nowadays than it used to be, say, 10 years ago, to distinguish between reliable and unreliable sources. So it really puts a lot of onus on all of us to be as well educated as possible. If you get negative information that seems contrary to what you think about your account holder, engage with the NPO. Try to figure out whether the information is accurate. Maybe it is, and then you have to make an adjustment in terms of your oversight, but don't sort of guess. NPOs are providing assistance, obviously, as we know, in conflict zones and other areas around the world. There is a lot of reporting and a lot of what I think we all would agree is sometimes disinformation about those particular areas, especially when there's political agendas. And so that becomes even more of a challenge for the compliance officer working with the business line to try to make a decision based on the information that we're intaking. Can we still manage the risk of this particular entity customer? So looking at that and trying to separate, as they say, the wheat from the chaff becomes pretty important. Some reporting actually can find its way into sort of mainstream services. And so it's important that you're willing to question the information. Now, I can just tell you from being in the AML community for as many years as I have, there's a number of really good vendors out there that provide information to determine issues like sanctions and high-risk entities and whether or not there's potential for financial crime. But it's important, if you're using those vendors, to upfront, not so much question every source, but find out what's their process. And I know for a fact that a number of these companies are very well run. They obviously fear reputational risk to them if they're not doing their due diligence. So it's sort of third-party management, right? Figuring out if I'm basing my information on your information, what do I know about the company that I'm paying to do this? So again, pretty important. If we can go to the next slide.
John, if I can interject, I just wanted to add.
Yeah, go ahead.
There are things that nonprofits can do to help with this as well. I know that a lot of our members Google themselves regularly to find out if there is disinformation about them on the internet, or maybe looking at some of these commercial vendor screening databases to see if they are in there and what sort of information might be flagged for them. If you, as a nonprofit, run across that, don't be afraid to go to your financial institution proactively and say, look, we ran across this. Here's the documentation proving that this is actually false or disinformation. it's much better to present that to them ahead of time than to have them encounter it and it look like you're trying to hide something.
100% agree. I think we sort of can tag team off this next slide because you've talked a little bit about this already, Andrea, and that is, activities in the fundraising programs will lead you to understand patterns. You sort of mentioned that, and that becomes important to what we talked about, the engagement at account opening. What do you expect? And you can tell me, but I would imagine for the most part, you can sort of outline how you're going to behave as a NPO throughout your time at the bank. But I'm guessing in some cases, it might vary depending on the NPO that you are, right? So if you are one that's dealing with horrific acts, hurricanes and that kind of stuff, obviously you're not going to know in advance, right? So it becomes important to understand the scope of that particular NPO.
Right. You can let the financial institution know that part of your mission is responding to natural disasters in the countries you work with. So for instance, there may be an earthquake in Afghanistan and a hurricane in Haiti around the same time, but you don't work in Haiti. You only work in Afghanistan, for example. So you can tell them that. The other thing is that, unfortunately, because there seems to be so much bad news surrounding us these days, don't assume that the financial institution remembers, A, that you work in Afghanistan, and B, notice that there was an earthquake. It doesn't hurt. Give them a quick email or a call and say, you may have seen the news, there was an earthquake, we're going to be going in next week, and just give them a heads up again.
That's a great point. And I want to dive to because I think we've already talked about the other bullets, but the last bullet, I wanted to ask you a question. So you said most of the information is readily available from public sources. Just given dynamics between entities and institutions, what I would recommend is it's probably not the best way to, if you get asked a question from the relationship manager or compliance officer and you simply say, hey, that's public, go get that information. I know you wouldn't encourage that. As you've already just said, be proactive. So if that's the case, nowadays it's fairly easy to say, hey, I'll send you a link. You can see what's here or there, or I have the information. So it's not spoon feeding, but it's being sort of open to the fact that that particular relationship manager may have no clue how charities are run. Of course, then they shouldn't be the relationship manager. But let's just say they're new to the game. Just simply saying, hey, that's public, go get it, that's not going to really work.
No, you need to provide it, but the fact that it is public gives the financial institution the opportunity to verify something. So for instance,
Absolutely.
going to GuideStar and knowing that the Form 990 is a legitimate document and that it is publicly available through, the IRS's information. That
right.
This.
Right. Let's go to the next slide.
So there are some things that nonprofits also should understand about the way financial institutions operate. And I know that quite a few nonprofits are aware of a lot of these things, but there may be some other things you haven't considered. Again, we're going to focus on the U.S. just because we can't generalize globally. And again, U.S. law, the situation is that the U.S. dollar transactions dictate that U.S. law needs to be complied with a lot of time. But in the U.S., financial institutions must obtain information about the nature and the prospective use of accounts and services when the account is opened. And then they must conduct an AML-CFT risk assessment of every account holder, as well as the anticipated use of the account, and to the extent that it's knowable, the prospective transactions that will take place. And then once the account is open and things are running along, the financial institution needs to monitor those transactions and account for unusual and suspicious activity. And if they do flag an activity or a transaction as suspicious, they need to file what's called a SAR, a suspicious activity report. I think John can probably explain better, but we talked about it in the blog. Playing this in with the disinformation. If you're in one of your commercial databases and something's flagged about your client, and it's not a government database, it's not the SDN list from the State Department, it's something else that's flagged it, that's not automatically a reason to file a SAR. So you don't take that step until you've gone to the nonprofit and tried to verify what's happening.
Yeah, if I could just add, we'll talk about our regulatory partners in a few slides, but the other thing that NPOs need to understand about the SAR regime, and outside the U.S. they call it suspicious transaction reports, but fairly similar regimes, is that in some cases the regulators may actually question why the bank did not file a SAR. So it becomes important for them to document that they looked at a risk and made the decision for the variety of reasons not to file. And so there's also a documentation requirement there. So unfortunately, in some cases, the bank defaults to filing because they don't see a downside to filing, which we can debate later on whether that's good or bad. I personally don't think that's a great way to go. But just so you understand that in some cases, the bank feels, you know what, I can't figure this out. I don't think that's suspicious. I'm not going to file. But then you got a regulator looking over their shoulder saying, you know, this charity we consider high risk. Why didn't you do it? That's why having those stakeholders part of this becomes really, really important. So I just want to make that point. So I agree with Andrea. You shouldn't just file. I think that's a bad way to go. Don't default to that. But the NPO should understand that sometimes we get second guessed and the financial sector sort of is weighing which way they need to go. That's why it's, like I said, so important that our regulatory partners be part of this discussion.
Great.
Let's go.
Next.
Yeah. Sorry.
So knowing, understanding how the financial institution has to comply with federal, state, and local regulations gives you sort of a better perspective as a nonprofit organization of what sorts of information you can proactively provide. So these are things like the history, size, and location of the nonprofit, as well as the names and addresses of your trustees and board members, a description of the specific sector that you serve, the nature and purpose of your organization, and the projected use of your account, the nature and size of the projected transaction activity. Again, these are things that are in the normal course of your business and need to be updated proactively, again, with things that are going to be might be considered unusual. An explanation of the regulatory oversight of the nonprofit is really, really a good thing to remind your financial institution so that they know that you're not just, you know, it's not the Wild West. Nonprofits are regulated. There are forms they have to file, and these are the things that helps the financial institution understand that there are controls around what activities that are going on within the nonprofit. Also provide the financial institution with some information on the due diligence and the good governance and the internal controls that you employ to protect your own assets. So they want to know that it's important to you to protect your staff in the field, their safety, the money, your donors, your programs, and ultimately the beneficiary. Next slide, please. Again, I know we've harped on this a lot, but be proactive wherever you can. You should provide your financial institution with periodic updates of anticipated changes in information related to your work or anticipated transactions that are not consistent with what the financial institution may have seen to date with you. Anytime there's a change, if you flag it rather than them flag it, it's always going to be better. Anything that without explanation might create a concern for the financial institution, try to anticipate that and let them know ahead of time. To the extent that it's practical, designate a single point person within your organization to communicate with the financial institution. There's nothing more frustrating than calling a nonprofit or calling even a commercial customer and getting transferred umpteen times trying to figure out who it is you're supposed to be talking to. Make sure that you have a single point person that's responsible for communicating with the bank. And then go ahead and schedule some get-to-know-you meetings and periodic check-ins, just so that you know that they know that you're being open and that you're willing to share information with them. If any of your key personnel has been falsely accused of a financial crime or has been confused with someone listed on the terrorist database, there's more than one John Doe out there. Let them know that you're not the same John Doe that's blowing up buildings in Afghanistan. Give them documentation so that they don't have to uncover this on their own. Anything that you can do to document who you are and the fact that you're legitimate and operating within the law will help your case. Next slide, please.
Yeah, and I really like that those comments about not just being proactive, but having a point of contact. That becomes important for the bank as well. You know, again, who's the owner of the account internally at the bank needs to obviously understand the NPO's activities, the patterns, and all of that. And it'll save so much confusion by doing that. So we can't emphasize that enough. One of the other areas that we talk about is, one is you don't get access at all. That's horrific. But in some cases, you have the relationship, but because of all the bells and whistles that the regulators want the bank to have, or internally the bank may actually put in place on its own, transferring funds becomes a challenge for the recipient. And so that's why it becomes pretty important to understand the funds transfer process. And so Andrea may have some thoughts about this as well, but the bottom line is get as much information as you can from the sender at the front end. And obviously, if it's sort of unusual based on the NPO's infrastructure has been described to you at the beginning, it's sort of a one-off transaction. Find out as much as you can at the bank about doing that. But one of the things that, as I said up front, that really resonated with me is the delays in transfers for legitimate risk management reasons, but unfortunately was really impactful in a bad way to the recipients and the beneficiaries. So, Andrea, I don't know how much your folks, training's the wrong word, but understand this process. But I think these are sort of quick and easy points right here in front of us on the slide, but it really becomes important, as we said, to be transparent, right?
Correct. And again, letting the bank know ahead of time that there are similar names or other organizations that may look like your nonprofit that aren't, and that create confusion. Go ahead and clear that up proactively, so that because you have a relationship with your financial institution, any documentation that you can attach, because they can't control what happens at the correspondent level. So any information that could help clear things up on subsequent hops that the transfer may make before it reaches its ultimate destination would be helpful.
Go to the next slide. Again, if we have one theme besides being proactive, it's transparency, right? It's communication. And then, as Andrea said, while there should be a point of contact in her world, there needs to be one in our world as well within the financial institution. That's the only way you're going to be able to manage what becomes fairly unique relationships. And I can tell you from our stakeholder dialogues and from my conversations with a number of financial institutions, many of them that were involved in the drafting of this report, by the way, they embrace this and they do this. It's really, really, really important. Now, the last one about careful not to require excessive information, 100% agree that that's a conversation that you should have. But I think some of it becomes, if you know what's out there publicly already, which we've learned a lot. My world has learned a lot about what's already being done by NPOs, and actually it's really impressive. And I certainly had no idea the extent of the due diligence that they do prior to these dialogues. So that became really important. I know my partners in the financial sector, if they weren't already engaged, now understand that. So again, whether it's excessive or unnecessary sort of becomes an issue depending on the regulatory oversight, but understanding where you can already get things, this dialogue becomes so important. And the privacy issue is something, banks care about privacy, but for different reasons. Obviously, the NPO community rightly wants to protect donors and beneficiaries' information and are not going to provide it unless it's absolutely required. So, Andrea, this is an area where your folks have been great, but need to continue to be as open as they can about, hey, look, in order to manage us, you don't need all of this particular information, and give them some options.
That's right. And nonprofits are required to protect the privacy of their donors and beneficiaries. So a financial institution should not be asking for beneficiary lists. We can't go and check every 12-year-old that's going to get a loaf of bread to find out if their uncle is a terrorist. That's not practical, and it's not keeping in line with international humanitarian law, which dictates that aid be provided on the basis of need. Also, banks shouldn't be asking for a membership list of an organization. The Supreme Court has actually ruled on that the government cannot compel a nonprofit to turn over its membership list. And if the government can't compel it, the bank shouldn't either. So there are limits. I think you can ask about categories of beneficiaries. Are they Syrian refugees? Are they schoolgirls? Are they, you know, is it a university? Is it, you know, what kind of program are you offering, and what types of people are you planning to serve? That's, I think, completely legitimate questions to ask.
Excellent. Yep. Next slide.
So what about our regulatory partners? What are they doing to help sort of enable financial access for nonprofit organizations? And we think there are some steps that regulators can take to address this issue. They can emphasize that nonprofits are not inherently risky, and that with appropriate due diligence, financial institutions should be able to engage with nonprofits, very similar to the way they deal with their other customers. It should not be a completely different category of risk. That the due diligence is there, it's doable. The government can also clarify that the policy objectives of combating illicit finance and promoting humanitarian development assistance are complementary goals. They are in no way contradictory. And they can also establish due diligence expectations. And I think, John, you had some more tips on the next slide.
Yeah, let's go to the next slide. One of the things that was a real key goal for all of us involved in these stakeholder dialogues had to do with the third bullet point, although let me jump ahead to the point right before that. Our regulatory partners need to continue to be open about statements of support for the NPO sector. So we've seen some of that recently from the Treasury Department and other entities. We need to continue to do that, obviously also internationally. We know that FATF has made that comment before. But the third bullet is pretty important. Part of the problem has been, if those of us in the AML community who are very familiar with what we call the bank exam manual created by the interagency banking agencies, the FFIEC, and examiners take that manual and use it to assess bank compliance. And so what's been in the past in that manual regarding NPOs has been fairly short and just emphasizes the high-risk nature of that community, which is both inaccurate and has caused a lot of problems. So what we were able to do, we know that that manual is being updated. We were able to provide recommendations for improving both describing that industry community, if you will, and also making the point that not all NPOs are high risk. Things should be handled individually, that sort of thing. And we're hoping when that manual gets updated, that'll be in there. But the training part of this is also equally important, and that means that bank regulators who send examiners to financial institutions need to be as aware as we are now of the broad scope of the NPO community. And so I think that, to me, is one of the most important things. Our regulatory partners have embraced this, by the way. They said they are willing to do this, and we're gonna hold them to that. And then just the last point here is the message that not all NPOs are high risk. If we've left you with nothing else, those of you in the banking community hopefully both understand that, and that's something that will be emphasized over and over in the guidance document. Why don't we go to the next steps, the last point here.
Yeah. So definitely, we obviously recommend that you read the guidance document that we issued last week. Give us your feedback. We welcome your feedback. This is a living document. It will be updated periodically as the landscape changes within the financial industry sector, within the nonprofit sector, and the regulatory landscape changes. We will be responsive to that and update periodically. I think we've emphasized throughout this webinar to communicate, communicate, communicate. Keep those channels of communication open, be transparent, and once you establish those good relationships, keep them going. And finally, you know, once again, not all nonprofit organizations are high risk, and not all high risk clients are the same. So no broad brush strokes. Look at each individual client, where they work, what kind of programs they operate, and what they're doing to protect their own staff, donors, and funds, and take it from there and apply the risk-based approach. John, did you have any final words there?
Just to echo what you said, but also the financial sector can improve society and communities if they extend access to NPOs to help them in, with regional issues, national issues, international issues, and to use jargon, it's a win-win for all of us. And hopefully we've begun the process of making that easier.
Kay, you're muted. We can't hear you.
I'm sorry, there. I have a few, thank you very much. I have a few questions for our speakers, and we have some questions being submitted through the Q&A box from participants in this webinar as well. We have a great mix of participants from both the financial and nonprofit sectors here. So please feel free to submit your questions in the Q&A box. It'll be at the bottom bar of your screen, and I'll read them off. If we don't have time to address them all, then we will address them via email after. One of the first questions is about where to get the report. And it is on the Charity and Security Network website, and we will also have a follow-up email with a link to this webinar and the PowerPoint and the report itself that will go to all participants. So,
if I could mention, if I could mention, it's also on the ACAM's website, and our community can also get it through the AML Right Source, and all of us, including you guys, have put it out on social media. So it's in various locations. And what I would say, send it to your peers and colleagues and friends and neighbors. We want to see it as broadly distributed as possible.
Thanks. Well, here's my first question for you both. This guidance is the result of a new level of dialogue between the nonprofit and banking sectors. What is the most interesting thing that each of you has learned about the other sector?
I'll go ahead. So I think this has been a really valuable process, and the dialogue hasn't stopped. It will continue, and we'll continue to learn things about each other. But one of the things that struck me was how complicated the compliance has become for financial institutions and how many layers of compliance and regulatory requirements there are. It's not like you just pick up a 10-page manual and you check the boxes and you're done. It's an ongoing process. There's a high volume of transactions that they have to keep on top of. And the layers range from anti-terrorist financing to money laundering to sanctions to keeping track of what's happening at the correspondent banking level. It's more than a headache. It's really a regulatory nightmare. And so, again, going back to what our regulators can do, they can help with guidance on their end and make things clear for financial institutions on what the expectations are.
John?
I think on my end, Kay, I think two things struck me. One is I knew a little bit about the NPO world. I knew that GuideStar existed and some other things. I had no idea of the amount of due diligence that most of the NPOs both are required to do or do on a normal day-to-day basis, and also the impact that the slowing of transactions has had. So even if you had access, the delay in getting transfers from point A to point B and the impact that's had on entities and individuals and people in dire need of help, that really resonated with me, and that's also an area that of focus for us going forward.
Thank you. As we noted earlier, there aren't clear legal rules for either banks or NPOs when an account is closed or a transfer is stopped either by the bank or the intermediary bank, correspondent bank, that's sending it to the recipient on an international transfer. What's the top thing you would suggest that NPOs and banks each do to reduce the de-risking problem of all the things we've discussed?
Yeah, I'm going to cheat. I have two things. The first is, again, for financial institutions to be mindful of the ways that nonprofits are different from commercial customers. That, again, trying to fit a square peg into a round hole can lead to problems down the road. We've heard stories from nonprofits that walked into a bank to open an account and were handed a form to fill out, and it said small business account at the top. Well, the fields aren't going to be right. They're going to say, who's your owner? Who are your customers? And it's just going to set the stage for frustration. So to the extent that you can develop tools and understanding and communication around the nonprofit way of doing business. It's going to really help things. The other is, again, to be aware that there is a lot of disinformation out there. There are people with political agendas. It's the easiest thing in the world to post a blog on the internet and have it get picked up in a Google search. So be very mindful of that, and know that there are groups that are individuals that are upset with nonprofits politically. They're upset with maybe their programs, or they have issues with the fact they're being targeted because of their faith-based affiliations. So again, just to keep an eye on that.
Dan?
Yeah, Kay, what I would add is just the communication with the regulator and the financial institution when you are aggressively and proactively banking these entities is really important. And so while there won't be any laws or regs that may change anytime soon, one way to stop de-risking is to both be transparent and be communicative. And I think, I know our regulatory partners want to see us open this up, but we have to be, the AML community needs to be proactive on its own as well, not just with the NPOs, but with our regulators, saying, look, we want to do this with this category of customer, and here's our plan. And I think if you do those sorts of things, a lot of these confusions or automatic defaults to de-risking hopefully can be prevented.
Okay. We have a lot of questions coming in from participants, so I'm going to jump to those for the moment. And ask one, are there any efforts underway to help nonprofits navigate the regulations with banks in the destination countries where a wire transfer is headed? So for the sending nonprofit to get help in dealing with the receiving bank.
We at Charity and Security Network are not currently engaged in anything that's specific, and I'm not aware of that. However, the Global NPO Coalition on FATF, which has organized around the Financial Action Task Force and done a lot of advocacy successfully in getting the perceptions about nonprofits to shift away from that particularly vulnerable language. There are some efforts through both that organization, the Global Coalition, as well as some of the member organizations that are doing outreach to nonprofits to help them advocate at the national level around the country's risk assessment and feed into those processes. So there are country level advocacy efforts, but as far as bank customer relationships, Kay, are you aware of anything?
No, I'm not, and maybe we've identified a need here.
Right.
There's another question of providing information when you think there may be a common name that will get confused, and providing enough information to eliminate a false positive. Does this apply, should this apply to NPOs receiving the funds and where the NPO or people that work for them may have names that are similar to people who may be on a sanctions list, such as Afghanistan?
Absolutely. I think it applies all the way down the supply chain. So whether it's vendors you're working with, or your local partner, or somebody who's working for you in one of your branch offices in country, anything that you come across that you think could sort of put on that lens and think of what is the bank going to, what is going to be their reaction when they see this? Is there a common name with an individual or an organization? There could be one word within the organization's name that's similar to another organization, and that might be enough for flag. So again, proactively let your bank know that there are some similarities, but they are distinct entities, and that you are not affiliated with those other people or organizations.
Okay. Another question is, should NPOs screen intermediary banks that the recipients use for transfers, or is that something your own bank takes care of?
John will probably want to comment on this, but my understanding is that you don't always, who the intermediary banks are is not known to the nonprofit and may not 100% be known to your home financial institution. John, do you want to elaborate on that?
Yeah, No, I think that's right. I think that's right, and that's where your OFAC procedures and filters come into play. Those, the sanctions screening, if you will. But that's my understanding.
There's another question about what kind of standards are placed on correspondent banking partners, and are global banks incorporating changes in the bank manual into their communications with their correspondent banking partners?
The short answer is yes, they are doing that, because correspondent banking, unfortunately, like NPOs, has been considered and labeled high risk for the past 20 years. And so there's been some questions about correspondent bank due diligence. And some correspondent banks, a number of them, especially in places in the Caribbean and others, are complaining vociferously to the Treasury Department and others about their inability to get financial relationships. But there has been, there's an organization that you guys are familiar with called the Wolfsburg, which is of other financial institutions, large banks, if you will, and they've created questionnaires on correspondent bank due diligence and other recommendations. So those on the call that are interested in that should check out Wolfsburg and FATF. They've done some things in that space as well.
Okay. We've talked a lot about the perception that charities are.
Kay, you've gone on mute. We can't hear you.
Lost you.
Now?
There you are.
Yep.
Nope, you're muted again.
Well, maybe as we're trying to get it, as she's trying to get back, maybe we should guess about her question, Andrea, and that is, obviously, historically, charities have been labeled high risk for a variety of reasons, especially since post 9/11. So what do we have to continue to do to make your point, which is the correct point, that obviously not all charities are the same, like not all MSBs are the same, not all banks are not the same. What's the best way besides what we're doing today to get that point across?
Yeah, it looks like Kay's trying to talk, but doesn't know that we still can't hear. Kay and I were talking about this the other day, and the fact that we had this wonderful stakeholder dialogue, and it continued in various forms, even though officially maybe the original group isn't still convening. And then we continue these dialogues, but how do we disseminate that learning to the wider community? And the guidance document is the one way to do that. So we encourage people to share this document widely, and that we continue to reach out to stakeholders and share the information that we found so valuable. But the flip side of this is we don't want to go, as you mentioned earlier, John, to the polar opposite, which is all charities are low risk.
Right.
While the comprehensive regulation of NPOs and their own due diligence have led to a very low probability that terrorist financing and well-managed nonprofits is, it's not impossible, but it's a very, very low risk. We also have to keep in mind that no nonprofit or government can guarantee that funds won't fall into the wrong hands. There's never 100% guarantee. We do everything we can to minimize it, but there's always that scintilla of a chance that something's going to go wrong.
The other thing too, I think you and I were both at the same event, but there was a bank event in the past 2 years with that particular, I don't know if the bank wants us to mention it, but the bank brought in all these experts in their institution and outside that showed how you could bank in an effective way, humanitarian and charitable groups. So I think the more we can get best practices out there that's working really well, good examples, articles about it, just new webinars about it, I think that will help. Certainly financial institutions, they're sort of on the sidelines wondering whether they should jump in or not. So I was really impressed with the institutions that have already done this, and we just need to get their example out to everybody else.
Great. It looks like Kay's still having problems, so I'm going to look in the question pane and see what else we can address that's been raised. One participant is asking whether there have been any guidelines or insights from U.S. regulators around crypto philanthropy. I haven't seen anything. I'm not aware of anything. If anyone knows of this, please let us know. This seems to be an emerging field, and while it is rapidly progressing, I think that regulators are trying to catch up, and I think that there needs to be continued dialogue with regulators around the fact that nonprofits are trying to figure out ways to get funds to programs, funds and services to beneficiaries. And if the traditional banking channels aren't working, they're trying to be creative. But if the regulators decide to clamp down on anything related to cryptocurrency in a way that they've clamped down and used the same sort of model as a sort of a carbon copy regulations over in the cryptocurrency world, it's going to stymie the creativity that is emerging around this issue. And I think that nonprofits and regulators should be able to jump into the sandbox and come up with creative ways to serve beneficiaries if the traditional banking model isn't working.
I would just say to that, though, there's a lot of concern about cryptocurrency in general, unrelated to charities, of course, as you well know. FinCEN, the Treasury Bureau, has been pretty active in this space, and I think have been pretty vocal about issues related to cryptocurrency as early as or recently as the past couple of weeks. So I would urge folks that are in that space to take a look at what FinCEN has said regarding that. I know our friends at IRS and FBI have talked about it. I don't disagree with your point, but it's like everything else. It's pretty complicated, and I think we just need to make sure all the stakeholders are engaged, and then we can come up with perhaps some solutions.
Looking down the questions here, somebody asked, please specify the reference to the Supreme Court construction on scope of required disclosure and pending litigation. I'm not aware of any pending litigation on the scope. This Supreme Court decision dates back to the 60s or 70s, I believe. It's quite old. And I don't remember the name of the case off the top of my head. Kay knows it. Unfortunately, we can't get her audio back on right now, but we could certainly send that information out with the email that we're going to send all of the attendees so we can answer that. Somebody else says, I work for a large global NPO working in every U.S. state and over 70 countries. We have one global board made up of major business owners, former U.S. government officials, etc. It is not appropriate for us to request their personal addresses and or passports. This is a recurring request from financial institutions every time we try to open a bank account. How do we deal with this request? Based on your presentation, it sounds like board member trustee addresses is an appropriate request. John, is that something you want to tackle?
Well, again, I think there's another question, a couple of questions down, that talks about the inability of an NPO to be able to get a compliance person on the phone, which is unfortunate. I would say in that situation, the broader question below, connect with the relationship manager. You may not be able to get a compliance person on, but maybe start there and explain what you're looking for. We're certainly encouraging compliance to be part of the business conversation in situations like that. But in terms of, yeah, you know, the recurring request, I'm not sure what's behind that other than, again, the fear of not being able to manage the risk. It doesn't seem to be an appropriate, you know, it was a request I hadn't heard a lot about, but based on what we've talked about, I really don't know how to answer this other than to have a conversation with the bank about the rationale for it and see if there's another way they could get some information they're looking for to make them understand the risk level.
We also have two participants who have raised their hands, and I'm not sure if that was intentional, but if those people have not already, I would encourage them to type a question into the Q&A pane. Again, if we can't answer it right now, we will do so via email, but I do see two people there. I'm just scrolling real quick to see if there's any other question that we missed.
So there's a question on Venezuela. Good question. Don't have any great answers to deal with charities that serve Venezuela. But I think it's something we should actually do some research on and maybe provide some suggestions back to the audience. Excellent question, but I don't have any immediate thoughts on how to make that work.
Yeah, that is a very good question. That actually came up in an outreach meeting that Treasury conducted with charities a couple of months ago. And one of the participants noted that they were hearing that some banks were refusing to send wire transfers to Venezuela, period. even though the sanctions do specifically exempt humanitarian aid.
Right.
So I know that Treasury's aware of the problem. I don't know if or what they're doing to address it at this time, but we can certainly look into that.
But that's another good point for how our document can continue to evolve. As we maybe add additional frequently asked questions. One would be something like this, right? It's a clear carve out for humanitarian purposes, but unfortunately, just part of it because of negative news, institutions are reluctant and understandably reluctant to process, but this is something where I think we all agree we need to do. How do you get that word out? So I think this is just another great example about how we're going to continue to update guidance for all communities.
One last question, because we are 1 minute over the time, but this is a really good question. Other than OFAC, what other reference literature could you refer me to for compliance issues for nonprofits? I would direct you to the appendix in our guidance. There's a list of organizations that provide resources for due diligence for nonprofits. And that's an excellent place to start with those organizations. And if there are things that you're still missing after that, those organizations can probably point you in the right direction. Again, I'm really sorry we can't get Kay back on the line. So I will thank everyone for participating. I noted that we had a huge participation. It looked like most of the people were staying on for the duration of the program. So thank you for tuning in. This is an important topic. And I'll let John make any closing remarks that he wants to.
Yeah, thanks for the invite. This, again, is hopefully a great example of working together, the AML community with the NPO community. We're going to continue to do this. We want your thoughts and comments. Please read the guidance. Give us input. We're going to continue to do additional outreach. Where can we do it? How can we be effective? But this is hopefully more than a good start today.
All right. Thank you.